Welcome to another video from Crypto Charge. Make sure you guys like and subscribe below to help push this video out to people that need it. I want to talk to you today about some of my predictions for 2023 for the crypto market. Now, 2022 was one of the worst years for crypto. We saw so many bankruptcies, insolvencies, Luna, UST, Celsius, Voyager, Three Arrows Capital, and the contagion just continued to spread and spread. And of course, the later part of this year, FTX, and now Digital Currency Group and other people that are affected. But looking forward into 2023, I think that we can have some optimism, and it all starts with the Fed, or the Federal Reserve. So this year we were seeing very hawkish behavior from the Fed, or restrictive policy, meaning that they're raising rates, making credit more expensive, as well as reducing the amount of mortgage-backed securities that they're putting on their balance sheet. And generally, risk-on assets like stocks and cryptocurrencies hate hawkish types of behavior from the Fed. So something optimistic that we can look for 2023 is that we have some of those very hawkish Fed members leaving, and we have some very dovish members entering office. So although we can expect at the top of the year another 75 basis points to be hiked, so that could be a 50 basis point hike and a 25 basis point hike, it could be 325s. We don't know exactly what that's going to look like, but we know 75 is pretty much baked into the top of this year. However, after those 75 points have been hiked, it's very likely the Fed will leave the rates right there at those elevated rates. Now, they won't start cutting right away. They want to make sure that inflation is tamed, and they want to make sure that they feel comfortable that when they do cut rates, that inflation is not going to just start ramping right back up again and have to go right back to where they were before all of that started. So one of the charts that I think we need to look at is the dollar, and the dollar has been impacted greatly by the Fed's actions. We basically have been seeing since the markets topped out in November of 21, the dollar has been on a parabolic rise. So let's take a look at that chart here. Looking here at the dollar, you guys can see that basically right here in May of this year, May of 21 is when the dollar really started kind of getting a little bit of traction here, finding its bottom. And then back here in February of 2022 is when that parabola really just fully set in on this weekly chart here. So although there's been a depreciation over these last couple months in the dollar, we've seen a fall down. I don't think it's time to celebrate just yet. And that's because if we look at where price has been historically, and we look at what price broke out of, right? We had price unable to break here in 2015, again in 2017, again in 2020, and this finally got broken through in 2022. So what's happening right now is very likely a higher low being set here, meaning that the uptrend is still intact as long as this blue band is held between 100 and 103 points, let's just call it. And I want to take you back to a previous moment where the dollar actually looked like it had peaked out, but it was not fully peaked out yet. So you can see back here in the late 90s through 2001 that there was a pretty aggressive grind for the dollar here. Now, albeit not as parabolic as what we have right now, but you can see we had a peak, we had a pullback, we had a second peak, a pullback, and then one final peak, and then the dollar was ready to capitulate on itself. But it wasn't all at once. So if we take something like the bars tool here and we were to say, okay, what if we saw something similar happen in this cycle? So let's go ahead and drag this over a little bit further here, take a little journey here with our dollar fractals, and let's just overlay this. So that could look something like this, right? Where we have a top, a pullback, a second top. Doesn't have to be three tops, but I don't think that the top of the dollar is in yet. Now, if we get a big break below this band and we see that there's a huge break of structure, yeah, then we can change our tune. But I think that we're in store for something a lot more like we saw in the late 90s through the early 2000s to occur here. That would also fall in line with the Fed keeping rates elevated through the first half of the year, and then maybe after seeing inflation come down, seeing those numbers get closer to 2 to 3%, then they would feel comfortable cutting rates and being more accommodative to the markets, buying back mortgage-backed securities, allowing risk on assets to flourish. Now, let's talk about Bitcoin here. Now, Bitcoin is kind of the coin that we talk about the most, although altcoins are very important, Ethereum, XRP, a variety of their top altcoin assets, but we always need to be mindful of what's happening with Bitcoin because it does demand the market. Although it has dropped in dominance significantly, it still demands most of the market. So we can always look to Bitcoin to kind of tell us what that next move looks like. So here on this 2-week chart, you guys can actually see that we've made some meaningful progress down towards some very important liquidity zones. If we look to see here where we're kind of targeting for the bottom for Bitcoin to come in, it'd be somewhere down in this region between $11,000 and $14,000. Could it touch 10? Sure, but this is the general pocket on the larger time frame that we're looking for. So it's really not a huge depreciation from current market prices, right? Maybe 28 to 35% more from current market prices before we find our bottom in there. That falls in line with what we just talked about with the dollar having one more push in it, right? So dollar strength is an inverse correlation with risk on assets falling lower. So Although most people don't want to hear that risk on assets like Bitcoin and the stock market have lower to go, it's something that is a very healthy behavior for markets to have. Previously, people looked at Bitcoin and they say, well, price never went below its previous all-time high. But the reality is markets like to rebalance themselves. So if you make a new all-time high and then you pull back and then you break out of that all-time high, but you don't retest that previous all-time high as a new floor of support, you have an imbalanced market. So at some point in the future, those areas will get filled. We've seen it with the Dow Jones. We've seen it with gold charts. We've seen it with oil charts. It's not crypto specific. Markets love to rebalance themselves, even if it takes years for price to come back and test those levels. So my overall prediction for 2023 is that the first half means more pain for risk on assets like stocks and cryptocurrencies. But as soon as the Federal Reserve starts cutting, I think the dollar is going to start falling. I think we'll start to see recovery. Historically, we generally see after a red year in the Bitcoin price chart, the following year for the yearly candle is a green candle. Does that mean a new all-time high? No, it doesn't, but it does mean recovery, and it means that a bottom is likely in. The next halving for Bitcoin is not until 2024, but generally we see price appreciate well before the next halving. So I encourage you guys to consider DCAing into some high quality assets like Bitcoin, XRP, and some of your favorite altcoins. Catch you guys next time.